All right, we're going to continue on with our meeting. This is the NCOIL-NAIC dialogue that we look forward to every time. My name is Tom Oliverson. I am the president of NCOIL and the co-chair of the committee. And where is Assemblywoman Hunter? There she is. And recognize Assemblywoman Hunter, who is the vice president of NCOIL, or president-elect, who is the vice chair of this committee. Okay. No need for a roll call. I'll just mark everybody's attendance. I would like a motion to waive the quorum requirement. Second? Second. All right, all those in favor? Aye. Aye, okay. Anyone opposed, stand up. Where's Carl? I like that. That was good. All right, before we get started, I just want to say how much I've truly enjoyed working with the NAIC officers and the NAIC staff this year in my role as NCOIL president. And in particular, I just want to thank my counterpart, Commissioner Andy Mace of Connecticut. Working with him has just been truly a blessing, and it's been fun to dialogue and share ideas back and forth. We are incredibly proud here at NCOIL of the strengthening of the relationship between the NAIC and NCOIL that has happened really over the whole time that I've been here, I think, going back to 2017. And we hope that that continues. We do really value the partnership between our regulators and the lawmakers, making sure that we're working together to preserve the state-based system of insurance regulation. So, before we get started, I'm just going to ask the commissioners if they wouldn't mind just introducing themselves to everybody here, and then we'll get rolling.
Oklahoma Insurance Commissioner Glenn Mulready.
Vicki Schmidt, Kansas, Insurance Commissioner.
Andy Mays, Connecticut, and you can see we all work well together. We share the mic back and forth.
And I think...
And an incoming
yes.
regulator.
I see that she's transitioning over to the commissioner's side here.
I am. I'm transitioning over. I am Senator Patty Cooter from Washington and the commissioner-elect from that state. Welcome.
So glad to have you here. You did kind of trick me because Taylor said you might be sitting down there, and then at the last minute you're just at the edge of my profile. So that's why I'm sitting here like looking around trying to find where everybody is. So it's tricky. So I think the first item on our agenda is a recap of the very recent NAIC. In fact, I think many of you came potentially straight from there to here, or maybe went home for a day and then came here. And so we're grateful that you're here, but to just get a recap at the NAIC meeting in Denver, which concluded earlier this week.
Thank you, Mr. Chairman. I do want to say, I want to echo the comments you made earlier. The working relationship between us, between our organizations, has been wonderful, and we look forward to that continuing. We look forward to the bonds between us being strengthened as we move along. I just want to thank you, the leadership, and all the members of NCOIL. It's been, a sea change, as I'm sure we all know, from the way it used to be a long time ago. This is the right way to do it, and we're happy to be here. As you mentioned, we were in Denver for the, actually Aurora, they just call it Denver. We were a little bit outside of Denver itself for the national meeting, and then we came here. So, if you want to know the commissioners that are really committed to this stuff,
or need to be committed, is that what you said?
Now, at that meeting, we had 2,300 registrants. I can do this. I've had some coffee, and about 1,700 of those were in person. We had 24 legislators from 17 states participating in the annual state legislator program that we host. That was our 16th annual program. We've been doing this every year, and we intend to keep doing it. As some of you who may have been at previous events know, we've sometimes had to shift them because we do need to respect when you're in session and when there may be external issues. So we try to make it as convenient as possible. And as Tom knows, we've worked with you on meetings too, so those would work as well for both of us as possible, and we look forward again to continuing to do that. The program, for those who haven't attended, is an opportunity for legislators involved in insurance issues to connect with each other, to learn more about the NAIC's role in supporting state-based regulation, because remember, the NAIC is a member organization. Despite what some may think, the NAIC is not a regulator. The NAIC answers to us, the members, the 56 chief insurance regulators of the 50 states, the District of Columbia, and the 5 territories. So we try to make sure that we explain to everyone what the role of the NAIC is, cooperating, coordinating, educating, and in addition to that, what we are doing as state insurance regulators. And at this meeting, we discussed some of the 2024 strategic priorities. So that includes, and I'm sure you've all heard, you all know the issues with regards to property insurance markets, nat cats, resilience, all the stuff that we're doing, and I understand that you are going to be passing a model shortly, on which I would certainly welcome. Health and long-term care insurance continue to be concerns. Insurer financial oversight and transparency, and we're going to go into more detail on that. I know that Commissioner Schmidt is going to be talking about the property casualty market intelligence data call and the long-term care actuarial working group. I think that would be Commissioner Mulready who will be discussing that. So we're going to go into more detail on that shortly. But insurer financial oversight and transparency, we've all heard, and we all know that over the past years of an extended low interest rate period, there has been a need to get capital into the market. There have been various ways to get capital in the market, and especially in offshore and asset-based, asset-intensive reinsurance. As regulators, we feel it is our responsibility to understand what's going on in these markets, to provide transparency, because that's how we can provide protection for consumers. And then, the other big issue of the day that we've been focused on, artificial intelligence and cyber. This is something that is not going to change. We have a letter committee that we created a couple of years ago devoted to innovation and technology, because we see this as a tool to increase the availability and affordability of insurance, to reduce friction, but we also know that there are concerns. Like any tool, it can be misused or improperly used, and we want to make sure, again, that consumers are protected. And I know the legislators there participated in some breakout sessions that were tailored and looked into some issues like regulation of PBM and heard from various commissioners who were leading the work of the NAIC on that. Commissioner Mulready, for instance, is a leader on the PBM issue. So I would encourage legislators who are interested in attending an NAIC meeting to take part in the state legislator program. Reach out to your insurance commissioner, or somewhere around here we have Taylor Walker. There's Taylor over there. She'd be happy to take your card, and we can get you info as the program continues for next year. We would love to see you there. We had a panel. The American Indian and Alaska Native Liaison Committee held a joint panel presentation with the Diversity, Equity, and Inclusion Leadership Forum, and it was called Mind the Gap, Building Tribal Relationships, Exploring and Expanding Medical Access Through Education, Insurance, and Understanding. And that was focused on issues of medical access affecting American Indian and Alaska Native communities, and outreach and education strategies. And I actually sat through most of that. I couldn't do the whole thing because I had another meeting, but I found it fascinating the way that we're trying to make sure that all communities have the services they deserve. As you know, in my own state of Connecticut, we do have 2 federally recognized Indian tribes, and one of them was a sponsor of this organization, which I did not know. So that's part of what we do at the NAIC. And I think it's one of the most important parts of what we do as regulators. We learn from each other, we share with each other. The reason that we think it is important to support state insurance regulation is that we at the state level are the most familiar with the issues facing our states. We have the knowledge, we have the willingness, we have the ability to protect consumers. And part of the way that we do that is to make sure we are aware of issues that may not necessarily affect our particular state. So that's, I'm going through this to let you know there are broad discussions that we have at this meeting because we feel we have to inform each other. You don't want to wait till something happens to you and then wonder what everybody else is doing. We had other educational sessions. The Center for Insurance Policy and Research held an educational session, and that is essentially the NAIC think tank, for those not familiar with it. They were looking at the short and long-term risks associated with commercial real estate investments. We've all heard the concerns that, post-COVID, some commercial buildings, commercial properties are not necessarily fully occupied or as occupied as projected, what's going to happen. So we have to address those challenges. We have to prepare for them. And the CIPR did a presentation on that. We had a number of other issues that we discussed. The Producer Licensing Task Force adopted adjustments to the Public Adjuster Licensing Model Act, and that would implement a 10% fee cap for catastrophic claims and 15% for non-catastrophic claims. And this is in line with the NCOIL model that was adopted earlier this year, so we thank you for that. We're amending our model so we can strengthen the regulatory standards. And we want to make sure, especially because people who are dealing with public adjusters, it's usually in the aftermath of something horrible that has happened. People are vulnerable. We want to make sure they're protected. We want to make sure that assignment of benefits, for instance, was done appropriately, not inappropriately, that there were no excessive fees charged. Then, we've been discussing this. As NAIC president, your term is 1 year, but it's a ladder. You go for 4 years from secretary treasurer all the way up. So this was my last meeting my last national meeting as president of the NAIC, the last one over which I presided. It's been a wonderful experience. Most of the times, there are times I wanted to go jump off some roof, but aside from that, and part of that has been working with my fellow commissioners, working together, because it's 56 states. We've got different geographies, demographics, politics, but we work together because we've got that common interest. And you don't see that too often, and I'm glad that we've been able to do that. And similarly, working here with you at NCOIL. And that was one of the things that attracted me to the NAIC way back when I was a regular state regulator. That was one of the things that made me proud, and I hope that will continue. And I know that we've got new leadership next year. John Pike from Utah was elected as Secretary Treasurer. We've got Director Dwyer from Rhode Island will be Vice President. Scott White from Virginia will be President-elect, which is where it really starts ramping up. And Commissioner Gottfried from North Dakota will be all over the place next year while I sit back and relax. He will be the president. And just so you know, Taylor can tell you, we had a discussion this morning, already sent in a request to John to say, you're going to be at NCOIL next year, so we're going to do everything we can to get him here. And, because John is, as I will tell you, as committed to state insurance regulation as anyone. And I know he's committed to working with you. So I'm looking forward to next year. I'm looking forward to being able to be a little bit more of a bystander. But I will also tell you, I will be as involved as I can be working with you as we move forward in this great enterprise of protecting consumers. I'm not sure if anybody has questions. I know that was a long and boring chat, but if you have questions, feel free.
Well, I think we have a couple of specific subject matters that we'll open it up for questions, but I did want to highlight what you just said about the legislator program. So for folks that may be wondering about that, NAIC does offer a course for lawmakers to attend the annual meeting. You go talk to your insurance department in your state. I've done it. Many of the lawmakers here that have been here for a while have. It really is tremendously informative and helpful, and you get a chance to not only understand the policy issues, but also sort of the structure of the NAIC and how they do the work that they do. And so I think it's tremendously valuable. And so I hope that everybody heard that loud and clear, and that you'll contemplate it. I was also handed a note by Mr. Considine, who wanted to be sure to point out that not with us currently, but with us in spirit, and having been at this meeting at some point during the meeting, we had 3 additional insurance commissioners. We had Mississippi Commissioner Mike Cheney, North Carolina Commissioner Mike Causey, and of course my Texas State Insurance Commissioner Cassie Brown was here for our welcome breakfast yesterday. So we tremendously appreciate the NAIC's continuing involvement in what we do. The next item on our agenda is a conversation and update on the activities surrounding the NAIC's Securities Valuation Office and the SVO. So I would like to say, just again as a thank you to the NAIC, that I had, as this conversation began, I had sort of issued a challenge of, you know, if it's that great, well, why can't we come and take a look and listen and hear from the folks? And commissioners, you graciously accommodated us, and so there was a delegation of NCOIL leadership that did attend, went to Manhattan there, and went to the SVO itself and got to see it firsthand and talk to the folks that run that office and what their vision is and what they were trying to achieve. And I think I can speak for the lawmakers that went, in that I think we all left with a much better understanding of what the mission was, and also the change to the mission and what we were trying to achieve with the latest revision. And I think that is obviously another great example of how we can work together, and sometimes the best way to sort of close the knowledge gap is to just get everybody together to see it firsthand. And so I really, truly am grateful to you all for giving us that opportunity to sit down with your staff, with you there in Manhattan, and to actually discuss this and see it firsthand. But I'll just turn it over to you for an update on that.
Well, thank you, Mr. President, and thank you all. I know I got you, Senator Utke, Representative Jordan, Senator Tice, and Assemblyman Gandolfo joined us in New York for that discussion. And again, it shows what can happen when we work together and we listen to each other. It makes the end product stronger. You know, we've gone over, as you know, for that. The idea behind this was, as the universe of securities, whether private or public, expands, that we need to ensure that the rating agencies that are doing this, as that number expands, that we can rely on those ratings so that we know that those ratings are proper. It's been triggered in many ways by significant divergences in ratings. But the NAIC, the Securities Valuation Office, is not a rating agency and was never designed to do that. I think the best way that I heard this described was we want to move from blind reliance on rating agencies to informed reliance on rating agencies. That really is what this was all about. And the proposal, which gave the SVO authority over those, not authority, but oversight, I should say, over some of the rating providers, just so that we would understand the quality of the work that we're doing. It was at the beginning controversial, and you know, we appreciate those who came to us with concerns, and we adjusted that proposal as we moved along, as we listened. And I'll tell you, I just have some of the issues here that we changed from the beginning. You know, it took more than a year of work. There were 3 or 4 different exposures, and we changed a number of issues. One, and this is one thing I know we heard from you, that it seemed as if the SVO was going to be doing the work, the regulatory work, which will not happen. So we put in stronger language around regulatory oversight. We are the ones, that the regulators will be the ones that will have ultimate authority. We are not leaving this in the hands of the SVO. it comes back to us. We are the ones that were either elected or appointed to do the job, and we will be the ones to do the job. So, that's why we strengthened that language about the expected involvement, let me put it that way, of regulators in the process, so that there can be no misunderstanding. This is not the SBO talking. This is us as regulators. There were issues about the dialogue between the insurers and the SBO. We clarified that, so there would be an understanding. There would be open communication. We also understood from insurers and from legislators that there was a concern that I'm not going to call it interference, but that the intervention by the SBO would become the norm. We wanted to make sure it was clarified, that we clarified it, that it would be infrequent. And we certainly expect it to be infrequent. We do not expect that to be the norm. And then we did say that the insurer may involve any authorized party in the discussion. That includes the credit rating agencies and any other party that the insurer may choose. I mean, this is, again, we're all stakeholders in this. We want to work together to make sure we get the best possible product. So based on what we've done, I think we've got a better understanding of the regulation. We've got a clearer understanding of the SBO's role, and we understand regulator oversight is essential. So that's what we're looking at now. One point that was brought up, and I think it may have been one of our meetings, so we want to make sure that it is absolutely clear. The staff must have no conflicts of interest, no financial involvement, no financial incentives. It's part of what we've been looking at. So that was on the SBO, the Investment Analysis Office. Now, in the other issue that I wanted to touch on would be looking at the framework for regulation of insurer investment. And that's, there's a framework that we're creating which modernizes the SVO, Securities and Valuations Office, capabilities to correspond with the ever-increasing complexity of insurance products. There's got to be coordination across NAIC groups when it comes to solvency and development of that due diligence program. We've developed the first draft of the RFP for that, and that was exposed at the national meeting in summer. And we sought a bunch of feedback. The objectives clear, what's going on, or is our RFP, are those requirements clear, and the selection process for the people that we will use, because we will be using consultants at all, is that clear? Now, the committee is still reviewing the comments that are received, but it is, or I'm hoping that we've made clear that the development of this will be a transparent process that we all are a part of. And we look forward to continuing discussions on that, and we're hoping, that was one of the things, sorry, I just couldn't wrap it up this year, but the work will continue into next year under Commissioner Godfrey, and we hope that we will finalize the program at that point.
Thank you, Commissioner. And I just want to point out to everybody in the room that I believe as we work through this issue this year that, there were many stakeholders that came to us as lawmakers and expressed concerns. And I believe that the NAIC has done a remarkably good job of recognizing and attempting to incorporate literally every suggestion that we brought to you. So, I mean, this was not sort of a take it or leave it kind of thing, but it was a very collaborative effort. And I know from my perspective, I feel like all of the concerns that I brought to you were addressed, and I just want to say how much I appreciate that. And in fact, earlier this morning, it was expressed to me that by some of the stakeholders involved in this that I think, best I can calculate at this point, that literally everybody at this point is at a conciliatory place and feels as though it's a good point to move on. So I know we have a couple of lawmakers that would like to ask a question. So I'm going to turn it over to Senator Teese of Michigan.
Thank you very much. And Commissioners, thank you for being here. I too very much value the relationship that we have, that it has gotten stronger, and that we have the dialogue that we have. Commissioner Mace, I just spoke with you. I want to thank you for the invitation to New York to go over the SVO information and for your kindness in hosting us in that. I was extraordinarily grateful for the opportunity to have the back and forth discussion. I still have a few concerns. Am grateful for the movement that you've made. I can't even begin to say how grateful I am for the movement that you made. My concerns are twofold. The first one still has to do with due process, and if one of the credit rating agencies is determined to be far off from what it is that you're anticipating, I believe they should have a right to be at that table, not at the behest of the insurer or the insurance agency themselves and the request of them. I believe the credit rating agency has a right to defend their position, and why. And then my secondary question, as I spoke to you earlier today, is what is it that would prohibit the SVO from using different criteria in their rating than what federal rating oversight allows? And again, thank you. I can't say enough how much I appreciate. You didn't need to come this far, and you did. I'm very grateful for it, but if you could help me with those.
Yeah, thank you for the question, and I might, before I answer that, I guess just sitting here, it dawned on me that sort of what we've worked through in this process, and I've been engaged in this conversation with this group, pretty heavily engaged on this issue. It's really a lot like all of you deal with your own legislation as you're drafting legislation, and you are challenged on it, right? So you either make changes or you tweak it, or it solidifies the reasoning why you have certain things in there, and that is what we have sort of watched transpire, is like building a good piece of legislation that you all do every day. So that's the process that we've seen. As far as the credit rating providers being at the table, I think our issue is that we regulate the insurance companies and we hold accountable the insurance companies. So that is our direct contact, and I would liken it to, if we had issues with their financials or other things outside of a CRP, we would not be the ones to invite their auditor or their CPA to the table. That would be the insurance company's role if they wanted to sort of defend or explain what has happened in that audit. And certainly we see that the same way. Absolutely, there's nothing that prevents them from being at the table, but it would not be our role to invite that person to the table, that vendor of theirs. Ours would be to hold the insurance company accountable and absolutely welcome them to invite the CRP to the table, but certainly not our direct connection with them. What was the second question? Sorry. What was the second question?
What prohibits you from using criteria that are fundamentally different from what the federal criteria are for the rating process?
Oh, I don't know that there's really anything that prevents us from doing that. If we wanted to utilize that, it will be an open and transparent process, though, in what we are utilizing. In fact, we're in the midst of an RFP to help craft with organizations to help craft the framework for that, and then that information would be public information on what we're utilizing.
And just to add to that, as we previously discussed, there has been no discussion, there is at this point no intention, and yes, as we discussed, there is nothing, you can't say anything, there are no absolutes. You know, we're not sure what's going to happen 10 years from now, but we certainly have no plans to introduce ESG criteria at this point. That is not part of the discussion.
So I thank you very much for your commentary, but to the legislators here, please understand that the organizations that have done investing have done fundamental transformation in what they perceive as good investing, and ESG was part of BlackRock and Vanguard. They were investing based on that. They've moved away from it because of the negative implication of what was actually happening financially as well as within the public. So as you're probably all well aware. But that was just one example of a concern that I have, where an agenda-driven policy could end up becoming a part of an evaluation that may not be necessarily required. And this is me personally speaking, not the rest of the world, me personally speaking. I again, appreciate very much what you're trying to do, appreciate the efforts that you've made, and just want to note my concern. Thank you.
Thank you. Representative Meskers?
First, I'd like to thank the NAIC for their willingness to listen to the legislature and to NCOIL. I was invited to the meeting in New York, and unfortunately for personal reasons, I wasn't able to attend. I did attend the briefing in Denver, at the invitation of the NAIC. For those of you who don't know, my background from 1983 on was in international banking. Linchpin to the investment decisions of both the mutual funds and the insurance industry were the rating agencies. If you stepped forward into the crisis of '98 and the crisis of 2008, the anticipatory pressures on the rating agencies on their investment criteria are pretty overwhelmingly difficult for them to manage. I think when we look at the sub-alt, the mortgage markets, commercial real estate, I think fundamentally reaching an agreement on working with the SVO office and the valuation process is a linchpin to protecting or defending the stability, liquidity, capital ratios of our insurance industry in each of our states. So I can't speak but to recommend that we look forward on legislation, that we make sure that we have an ally in that office. And I encourage us, and I'm glad that we're not delegating the authority, but we're creating a stronger unit in terms of that overview. So I just want to lend my voice to that. Thank you.
Thank you. Okay, we're going to move on to the next little topic here. So it's a related one. One of the issues that we discussed during our visit was with regards to the NAIC's framework for regulation of insurer investments, and within that framework, the request for proposal for credit rating provider due diligence. The NAIC's stated goal here is the establishment of a robust and effective governance structure for the due diligence of credit rating providers. Could you provide us with some background as to why the NAIC believes that the due diligence is necessary, and also how the proposal interacts with the Federal Credit Rating Agency Reform Act?
I'm not the person to discuss the interaction with the federal. Did you want to touch on that? Okay. It was on the RFP for credit rating provider due diligence.
Sorry, Tom, I was getting a mint over here and missed some of the question, but
Sorry.
the RFP.
Yeah, I
with
think
process-
I think the question, Commissioner, is just how the proposal asks for a due diligence for credit rating providers, and of course there's this Federal Credit Rating Agency Reform Act, and so we're trying to understand the intersection between those two, and kind of what the thinking was for the NAIC in terms of including due diligence for credit rating providers within the framework for regulation of insurer investments.
I'm not sure I can speak to the genesis of that, other than the SVO that we were just talking about, and that is, we're at the very beginning stages of issuing that RFP out,
Okay.
so I can't really add a lot to that.
Well, maybe we'll just visit maybe later
Yeah.
about that, but obviously that's something that I think that just kind of came across my desk here in the course of this meeting, is something to sort of, I apologize if you guys didn't get that.
Yeah.
Sounds like we didn't communicate that to you ahead of time. I apologize for that.
Yeah, no, the RFP, that's the one that I mentioned earlier that we're working on.
Yes.
We got the last request for comments, I think, closed in October. We're still discussing that, and we will be working on that next year.
Okay.
So that's not been finalized at this point.
So
And,
we'll
but
just
I can't
continue
speak
to
the
dialogue
federal.
on that then.
Yeah.
Perfect. The next item on our agenda is an update on the NAIC Property Casualty Market Intelligence Data Call. And then we talked about this morning at breakfast, but this is, I think, again, for the folks around the U here, we're all being pushed really hard to, quote, do something. And I think many of us are hearing that, there's a million things you could do, and 999,000 are really bad ideas. But we have to be able to articulate and push back and explain why. And so, as I said, at the beginning of this year when we first learned about this, how exciting it was to know that you were doing this. And so we're just kind of curious where we are on the update, and any thoughts that you might have as far as when we as lawmakers might be able to be able to access that information in order that we can help you do the right thing in our states and not totally blow up our insurance markets.
Well, I think that's a great way to look at it, and it's definitely a data-driven society we live in, and this data call is part of that. So on March 8th, which was the beginning of this year, we did issue a comprehensive multi-state data call, and we wanted to gather granular information on the homeowners insurance market. And insurers subject to the data call were given 90 days to get their information back to us, and so the deadline for submission was June 6th. The data call, we want to help insurance regulators protect consumers. We want to hold our insurers accountable, and we also want to ensure that we have a fair, competitive, and healthy insurance markets in each one of our states and our jurisdictions. The data call represents a collaborative, nonpartisan work that the state insurance regulators have undertaken through the NAIC process to address the critical challenges that you've just talked about, both the availability and the affordability of the property insurance. And also, we want to look at the financial health of our companies. We want to make sure that when a homeowner has a claim, that the insurance company has the ability to pay that claim. So we know that, as you have clearly stated, all of our states are facing increasing severity of the natural disasters. We have escalating reinsurance costs. We have continued inflationary pressures on goods, and we need more visibility into that property insurance costs and the coverage challenges that our states are facing, and quite frankly across the nation. So the NAIC data call will provide deeper insights into the market concentrations and competitiveness. And I'm sitting right next to the president, whose theme this year was Mind the Gap. And so we want to identify those potential coverage gaps in each one of our states and territories, and then also determine where mitigation efforts and resilience efforts might come into play. The NAIC's data call was gathered at zip code level data, and we gathered information on, I'm going to read the list, premiums, policies, claims, losses, limits, deductibles, non-renewals, and coverage types from the property and casualty insurers that represented more than 80% of the national property market by written premium. And as you might imagine, there's a lot of subsets of each one of those in the data. I can't remember, I think there's over 700 lines of data that were requested or something. It was a lot. So many states, some of our states, many states already do collect zip code level data on the property markets, but not everybody gathers such granular information. And again, that translates directly into the affordability and availability of the policies. The NAIC hopes that we're going to help everyone, state legislators and us as regulators, or state legislators and regulators, address that gap. Since June 6th, the NAIC staff have been reviewing the data, and they've been conducting quality checks and reaching out to insurers as the questions have arisen. And there have been some insurers that maybe didn't understand something correctly and had to resubmit data. So it's been a real back and forth process, and I think that division has been extremely busy since June 6th. So we at NAIC membership have agreed to share anonymized subset of data collected by the NAIC with FIO, with the Federal Insurance Office of the United States Department of Treasury. We would like to ensure that we can have undue duplication, that FIO won't go asking the same questions, and that's a real compliance burden on the industry if we're asking questions and they're asking questions. And so we were hoping that with the data that we have agreed to share, that we can all be happy. We have not made any states, our individual states haven't made any decisions about the future scope of this project or the execution of the PCMI for subsequent years. But I think it's important for you to know that the MOU that the state signed with NAIC does allow for subsequent calls. And I think that that expectation is that it will be an annual effort. You know, if we can develop this data over a period of time and look at trends and you know, troubled spots and make progress on closing that protection gap, I think this would be a highly successful, while painful process. So, we are happy to answer any questions.
I just want to say also that I think, you know, I know that there was obviously some interplay with FIO on this, and I know we all get our hackles up a little bit when they step in our space. But I feel very strongly, and I've always felt that what you're doing is so important. I'm almost not even interested in what FIO's angle is on this, because I just want to be able to have the data myself, so that in my home state that I can not only speak to what's going on in my state, but I can also say, you know, because I think part of it is that I need to be able to tell people in my state, yes, I understand that rates are high. Yes, I understand there are some issues. But look over here. I mean, so, you know, how do we as a state, you know, in the way that we have managed our insurance market, how are we doing compared to other jurisdictions? Because I think sometimes what we as lawmakers hear, and you probably do too as commissioners, is that, you know, folks back home think that it's just them. And they don't realize that it's literally a nationwide issue, and that in some places, you know, they may be able to count their lucky stars that it's not as bad there as it is over there. And so I really think that this is something that we can all benefit from. And so I'm just, again, really excited. Does anybody have any comments on this? Wow. No lawmakers. Everybody's quiet.
Oh, sorry, I was just responding to a question from Senator Walker, who asked if the information is available yet. No, it is not. I will tell you where we are, and I will tell you why. This is the largest data call we've ever done, and for a number of companies, this was a different data. Yeah, it's not a normal data call. They're looking at different fields and all of that stuff. So we knew that we had to make sure, and I think it was Assemblywoman Hunter earlier today who talked about garbage in, garbage out. We wanted to make sure the data was correct. So that involved going through various iterations. And part of what we did, you know, we've got the data coming into the NAIC through our MOU, but it also was fed back to the individual states just at the, you know, at the beginning of the process to make sure that the data made sense. And I will tell you, you know, I don't know about the IT people, I don't know about AI, but we did get some data, and I've seen some in Connecticut that made absolutely no sense. There were mistakes made in programming and so forth that we had to go back. So it's perhaps taken a little longer than we would have expected, just purely on the technical side of things. We have seen preliminary results, but those aren't the results that we're going to share yet. We want to make sure that we've got everything right before we share. You know, what we've done internally with the regulators is just to give them insight into what this data can tell you. And if you see this, I'm not sure if you saw any of that in Denver, but if you see it, you will realize just how powerful a tool this can be. So short answer, not available yet. We're going to get it out as soon as we can.
But I think also, since going through this process this time, next time, we're going to have it all, it will be much, much easier. And so it is a process that we're repeating over and over again. But I think, you know, we don't want to put bad information out there for any of you or for us.
No, I just wanted to comment, Tom, if I heard you right, what I heard was you cannot wait to say, yeah, things are bad here in Texas, but at least we aren't Oklahoma.
I say that all the time in Kansas.
I probably wouldn't say that exact thing, Commissioner, because I think most of us in Texas still look at Oklahoma as being part of Texas. Touche. I appreciate that. Commissioner Schmidt, thank you so much for the update on that. We appreciate you. And the Red River whole thing, we love you, you Okies. It's all good. You'll get back on top someday. All right. So in segueing to our next issue, which actually I think dovetails nicely with what we were just talking about. So we heard earlier this year about the NAIC's data privacy protection model law. And I'd like to say, first of all, again, speaking to the very positive relationship that we have between the two organizations, we had asked at our last meeting if it would be possible during the dialogue to have a couple of lawmakers participate in this working group, and you graciously accommodated us. And so for everybody that's here, I just want to report that State Representative Matt Lehman from Indiana and Pennsylvania Representative Greg Scott are actually working with your members as part of that drafting group. So I have Representative Lehman here today, and I'm just going to turn it over to him for a second to see if he has any comments on that.
Thank you, Tom. This will come as a surprise, but I did not expect to speak on this issue. No, it's been great. I was in Denver and had a chance to get to sit on some of those meetings. This is a very, very big issue. I think it has tentacles that go off in a million different directions. And so I do think I do like it that you were welcoming to allowing us to be a part of that drafting, and also some people from the industry, because I think it is an all hands on deck. How do we get this to where we are making sure that the data that is gathered is, number one, used correctly, and number two, how is it protected? And those are key things I think we're being asked by our clients, by our constituents, is in this whole world of big data, how am I protected? Mm-hmm. And so I like the approach you guys are taking. It's been very deliberate. We've gone up, and then we've gone back down, and we're coming back up. So I do think we're on the right track, and I do appreciate the work you've allowed us to be a part of.
It turns out that we actually have a link to the draft model for anybody that wants to take a look at it. It's in the app and on the website, so it's there. Commissioners, could you provide us a summary of the working group and kind of how things are going and where we go from here?
Sure.
From North
Commissioner
Texas.
from North Texas.
Far
will
North
speak.
Texas.
Yeah. So some quick history there. The Privacy Protection Working Group was appointed in 2019, dedicated 2 years of research to this, talking about the collection, use, and disclosure of information that's gathered in connection with insurance transactions. There's two active NAIC models that primarily play into this. The Insurance Information and Privacy Protection Model Act, Model 670, was approved in 1980. I wasn't even born then. And then privacy.
You weren't? 1980. You speak as though that was 100 years ago, when Texas was a republic, including the portion that's now Oklahoma.
All right, sorry, get off track here. And the other is Privacy of Consumer Financial and Health Information Regulation Model 672. That was approved in 2000. And that was tied to the Gramm-Leach-Bliley Act. And while they've provided good framework, we were moving forward due to business developments, technology developments, and that sort of thing to sort of modernize and amend those. Lots of work was done. Summer of 22, the national meeting, they approved the request to sort of draft that new Model 674. Worked on that for quite a bit of time. Ultimately, no consensus was reached. And the H committee is what this is under. That's our Innovation, Cybersecurity, and Technology Committee that was formed a few years ago due to the way things have evolved. Request was made to extend that to December 31st of 2024. And with transition of leadership in 2024, regrouped, reconsidered what to do on that, whether to continue revising or to start new. On June 12th, after reviewing public comments, all comments from state regulators and interested parties, the working group held an open call and basically voted to pause work on the Privacy Protection Model Act and instead modernize and enhance existing Model 672. That was after lots of feedback from stakeholders. 672 generally provides protections for non-public financial and personal health information about consumers that insurance companies, agents, and others hold or are engaged in. Chair draft was exposed on August 5th of this year for a 30-day public comment. This was only on Section 5 of that, which is the third-party service provider arrangements. A drafting group was formed and held open meetings to discuss Section 5 of that model on September 30th and October 31st. And it was that drafting group that Representative Lehman drew the short straw on and participated in that. And Representative Greg Scott, all joking aside, very much appreciative and thankful for that input. Sort of like the earlier conversation, we come up with a better product when we all work together on that. And so held a regulator meeting on November 4th, just a couple of weeks ago, to discuss next steps. Working group has requested public comments now on other sections of that. Feedback on that is due by November 25th. Is that Monday? Anyway, just a few days away. November 11th, released a revised version of the Section 5 of that draft, giving the consideration to those stakeholder comments. And then just at our fall meeting, a request was asked and granted to extend the continued drafting on that and discuss next steps for that process. And again, I just want to reiterate that it's an open process. We certainly welcome input from all stakeholders, including everybody at this table or other legislators. Your perspectives are extremely valuable. You are the ones hearing genuine concerns from individuals and constituents in your district. So we need to hear from that. You're hearing directly from them. And again, thanks to Representative Lehman and Representative Scott for their continued participation in that. The next call we have to review comments is scheduled for December 19th. I think that wraps up the report on the privacy.
Okay. All right, moving on. The last item I have on our agenda is an update on the work of the NAIC's Long-Term Care Actuarial Working Group. So we talked about this at our last meeting, but I understand there have been some developments. And for those that were not here in July, the NAIC work group is working to develop a single long-term care insurance multi-state review approach, which I can only imagine is not an easy task. But we were just wanting to get an update and see where we are on that and how it's going.
Okay, that's me again. And forewarned, if we can, I would love to have a couple minutes at the very end of all of this for just a personal privilege moment if I can, so just so I don't forget. Okay. At the end of it all, very end of the meeting. So, to create a consistent regulatory environment in long-term care, it's been a real problem. Long-term care and pricing models and actuarial work that had been done long ago. So in 2019, we formed the Long-Term Care Insurance Task Force, really to improve the rate review and approval processes, evaluate options for folks to reduce benefits and help them keep their coverage. In 2022, we adopted the Long-Term Care Multi-State Actuarial Review Framework. And so we have had that in place. It is a voluntary participation. I think the bottom line on this is the state of Oklahoma or many other states just don't have the resources to hire the specific and granular actuarial expertise that's needed to really review some of these things. And so it was sort of a pooling of resources for that. So they file with that multi-state team, which is made up of insurance department actuaries. They review that and then come back with a recommendation on those rate increases for regulators. It promotes a lot of good interaction between our states. This year, the working group was charged with developing a single, because we were using Minnesota and the great state of Texas models in this, and to replace that, to have a single. It was a little bit confusing with two different models that were being utilized. So from that, we heard feedback from fellow state regulators, from industry, maybe from some legislators, and largely agreed that a more transparent and explainable single methodology would be more helpful and help to get more buy-in and adherence here with the different states. So sought feedback on that. Key questions they were asked to consider were whether adjustments to the Minnesota approach cost-sharing formula would result generally in lower future rate increases for older age policyholders than under the dual approach, and whether such an adjusted Minnesota approach would align with key principles. Those were the key issues. Last month, after months of discussion and public input, the working group adopted the Minnesota approach with the current cost-sharing formula to be used as a single long-term care multi-state rate review process. So Tom lost, Paul won on that one. So there will be a call on 12/13 is the next call on that, and then the ultimate intent here is that potentially we would disband that task force at the end of this year, effective 12/31.
Any questions on that? Okay, I think that concludes our planned business. Is there any other business? Chair recognizes Representative Lehman.
Yeah, so there's a growing issue I think I want to just chat about. And that is, we have seen, especially I know in Indiana, a lot of Midwest states have gotten hit really, really hard with hail. And the response of that from the industry has been, we're losing money, we got to take rate, and the departments, to their credit, have managed that very well. So we've seen, again, I'm in this business, we've seen increases 20%, 30% in premium. There's also this shift of transfer of risk back to the insured. And we just had one of our carriers announce that they're going to a $5,000 minimum deductible and ACV on all roofs regardless of the age. And so if you play that out, if I have a 10-year-old roof that's going to be depreciated, say 20 or 25% at ACV, and I got a $5,000 deductible, if I lose that roof, I'm going to pay half that claim. We have other companies that are going to a percentage deductible, and some even as high as talking about a 5%. So if I have an $800,000 house, I can have a $40,000 deductible on my wind and hail. When we talk about affordability of insurance, I may be able to afford the premium, but I can't afford to pay the claim. Is that a concern at all of the NAIC, that we're creating a situation where not only are we transferring risk back, and there's no buyout. I mean, you can't like buy down a lower deductible or buy it back replacement cost. That's just what it is. And I know maybe it's just a season, and carriers will soon back off of that. But during this season, I think we're creating to the consumer the inability, unless I've got $40,000 to burn a hole in my pocket in cash in the bank, I can't pay that claim. Has that hit your radar?
Yeah, absolutely. It's on our radar. And I think our response to that is twofold. Number one is that we have really, I don't want to say we've shifted, Andy, but we are focused on resilience and mitigation when it comes to specifically to homeowners insurance. That I'm a little slow. It took me a while to figure out that I couldn't impact the weather in Oklahoma, but we can help with resilience and mitigation. And so I know that tomorrow you guys will consider the Strengthened Homes Act that we passed in Oklahoma this past legislative year. So things like that will issue grants to allow folks to afford to fortify their homes. So resilience and mitigation is a focus, but I think the second thing is maintaining a competitive market with lots of choices of, I hear what you're saying. Ultimately, that person, they don't have roof coverage, right? For all intents and purposes, they have been carved out of roof coverage, but that's not the norm. That's not happening with all of our carriers. So I think with establishing a competitive free market with lots of competition, allowing them to price properly their product, to rate it properly for the risk, that helps to have a competitive free market, vibrant environment there, and gives choices to folks from Indiana or Oklahoma. But that's the goal, is to have other choices, because not everybody's going that same direction.
So maybe a follow-up to that is, because I know we talked about this at the NAIC meeting, was with the fortification languages like you passed it. Several states have done this. Indiana has not. So my question would be has the carriers in your state responded to that positively? Like, we're willing to back off maybe some of our aggressive wind, hail stuff if these people do take advantage of the grant program?
Yes. Now, I don't want to, they've not come to me and said, we're going to drop our rates, a substantial amount. However, the vast majority of carriers in the state of Oklahoma offer a substantial discount for a truly fortified home. And so that's already in place. And as far as industry goes, there's excitement and legitimate support for those type programs.
Thank you.
I just wanted to say, in Kansas, we took you had some discussions at one of the meetings I was at about individual savings accounts to pay premiums. in Kansas, we're introducing that legislation this year, not for, well, it could be used for your catastrophes if it happens, but we're also, put it away, and then you can draw it down for premiums or for your deductibles, et cetera, et cetera. We won't put a limit on that. And we're modeling it after some adoption credit legislation that we have in Kansas. And so stay tuned, and we'll see if we can get it done, because I think it's going to take a combination of many things to help this issue.
Yeah, and you guys will be reviewing tomorrow that legislation, I think, by Representative Hefner here, potentially, someone else. Anyways, disaster savings account type legislation.
All right, very good. All right, well, before I give you your point of personal privilege, I just want to make sure everybody in the room knows that as much as we're sort of jibbing and jabbing back and forth here about Texas and Oklahoma, I would not be here at NCOIL were it not for the fact that my office as a newbie lawmaker in the spring of 2017 received a very kind, very nicely written, typewritten letter signed by a certain representative from Oklahoma with the last name of Mulready, who was inviting me to join this incredible organization that dealt with insurance stuff. So Commissioner, I appreciate you. I wouldn't be here without you. So I will recognize you for a point of personal privilege.
Thank you for acknowledging I reached across the Red River. No, I did. Thank you. I did just want to take a couple of minutes with our last NAIC NCOIL dialogue with Tom Considine here. And Tom has served for 9 years, and we have seen throughout that 9 years. And for those of you that don't know, I mean, I was in your seat for a few years of Tom's service as well as a legislator, and then on this side of the table here. But just have appreciated the collaboration and his challenges, which again have improved lots. And so just wanted to recognize that service and the relationship that we have enjoyed and that we've enjoyed personally. And we now look forward to Will. We've been, of course, had Will most of that time as well, and look forward to working with you there. And then if I might, something else that dawned on me as I sat here 6 years ago at this meeting, Patty, it was when they recognized you that it dawned on me. I was hosting the NCOIL meeting in Oklahoma City. Those of you that were around may remember they had forecast snowmageddon, and so a lot of people didn't show up, and that was when I discovered that Oklahoma meteorologists were not as accurate as where I'm from in Boston, Massachusetts, as far as forecasting snow, because we got no snow whatsoever, and a lot of people didn't show up. But I, too, was in your seat there, Patty, I stood up and welcomed everyone, and I joked that I was in elected office purgatory. I was no longer a state representative, but not quite the insurance commissioner. It was that window of time in there, so that's where you are today. So welcome, Patty. And I just thought I might also recognize, just as an update to you all, some of our ranks that have changed just recently. But Patty is one. Commissioner Kreidler served for 24 years as insurance commissioner in Washington, previous state legislator, previous congressman, and then finally he attained insurance commissioner, and but served for 24 years in that role. And so he has retired, and Patty is taking his spot. But also Indiana, Amy Baird has stepped away, and Holly Lambert has been brought into that spot. And Holly was previously in the department as a market conduct attorney. And in Maryland, Kathleen Borain has stepped away, and Marie Grant is the new commissioner there. She was the Assistant Secretary of Health, and previous to that had a role with a major health insurance company, so her background is in health. And then in Massachusetts, my old home state, Michael Kaljow was just named commissioner there just 2 weeks ago, and his background is in government affairs and government relations with Blue Cross Blue Shield of Massachusetts, so also a health background. And then days ago, at the last moment in our meeting in Denver, Commissioner Kevin Gaffney from Vermont announced his retirement at the end of this year, so they will be doing a replacement there. So just kind of a quick update on some of our changes in our ranks. So thank you for the personal privilege.
Glenn, thank you very much. And again, there's two things I'm most proud of here of my tenure, and the growth and stability and upward trajectory, really financially and membership-wise, of the organization is number one. But number two is the way, with the support of the membership and the presidents and other officers we've had, is right-sizing and right-fitting the relationship with the NAIC. You know, I said to Senators Breslin and Seward and Holman years ago that really the number one reason the organization exists is to preserve state regulation of insurance, and it makes no sense for the two organizations to be, and this was not an exaggeration at the time, at each other's throats. And so, you know, have to be pulling the oar together. And so with the hand-in-hand cooperation of the officers and some of the non-officers, most principally Glenn, on the part of the NAIC, it's just really what I've been most proud of, and can't thank you enough. And it really is, it's the NAIC and NCOIL are really comrades in arms for the continuing battle for state regulation of insurance. And so I thank you for your kind words, and I thank you for your efforts. Thank you.
And
Commissioner Mays.
If I could add just one more point there, I couldn't agree with you more. I remember the old days with Senators, wonderful people, and I never could understand why the organizations would be at loggerheads. And I also agree with you, well, I agree with Glenn, that the leadership has been wonderful here. And I agree with you that people like Glenn have really helped from our side in order to build this partnership. So just, and, you know, for those who weren't there, I do want to let you know, and I feel really proud of this, that at the NAIC meeting in Denver, Glenn received the Ray Farmer Award for Leadership for his work at the NAIC, including what he's done here. So I think it's been well-deserved. I'm happy to sit here with him, you know, watching him turn red, as we mentioned Texas. But I just thank you for letting me know.
When I called Sally and told her I'd won this Ray Farmer Award, her comment was that I know nothing about ag. How could I win that award?
Well, again, we are truly grateful that you took the time to be here. We know it's been a long week for all of you, and we're just grateful that you chose to spend your weekend with us. I hope you enjoy the weather. We ordered that up just for you. And I am required dutifully to tell you that we are finishing a couple of minutes ahead of schedule, but lunch begins promptly at 12:15. So if there's no other further business before the Committee on NAIC NCOIL Dialogue stands adjourned.